Welcome back, everyone. This is Thomas Triple T with another new bullish crypto analysis. Before we dig in and take a look at the news section of the macro news that may impact the markets across the world, and remember this is for edutainment only and not for financial advice. Additionally, I would appreciate it if you could help spread out my analysis to others by clicking on the like, smashing the ringing my bell, hit subscribe if you haven't, and share your thoughts in the comment section. That will help the algorithm to get the news out to others. So with that in place, let's get to the news analysis. We'll start off with Deutsche Bank headquarters in money laundering investigation. Every few years, some major bank gets in the news about cheating customers, money laundering, market manipulation. It just doesn't fail. But time and time again, they get second, third, fourth, fifth chances to fix things. Anyways, Deutsche Bank, financial regulator and federal police also involved. The bank has been trying to clean up its reputation. If a bank keeps trying to clean up its reputation and it keeps doing things that are suspicious, I wonder how effective they are at cleaning up their reputation. This situation involves possible late reporting of suspicions, and their shares have fallen. And just give you a recap, I highlight some history here. In 2020, Deutsche Bank was fined 13.5 million euros for late reporting of suspicious activity linked to potential money laundering. That was like less than 2 years ago. U.S. Department of Justice has also been investigating it for years over trades that authorities said were used to launder 10 billion out of Russia, which has led the German bank to be fined nearly $700 million. In 2018, BaFin took the unusual step of installing KPMG as a special monitor at Deutsche Bank to oversee progress in money laundering controls. Doesn't seem like they're making a lot of progress. First, on the crypto side, imagine if a crypto company did any of these stuff. Goodness, the lawmakers would be all over them and shutting them down. But no, if you're a traditional bank, you get unlimited amount of opportunities to fix / continue doing what you're doing. The stock market sell-off has another 20% to go, says the godfather of liquidity. Basically, they're saying that where we are now in the market, they're expecting at least another 20% drawdown. So, and I believe that is to be the case. If you look at the graph for S&P 500 and Nasdaq, you see that it's just gone ballistic over time, and a correction. We already are in a major correction, but there's plenty of room for it to grow some more. So, Morgan Stanley warns of potential bear market in U.S. Stock market. They're not the only one. That article I just went over, same thing. It's just more bearish news, and the macro factors impacting the bearish sentiment is there, and it's not going away anytime soon. We could be here for until at least 2023. This is an opinion article from Market Watch, and there's a big hole in the Fed's theory of inflation. They're citing that incomes are falling at a record 10.9% rate. Um, this one right here, the most concerning thing about Thursday's report on U.S. gross domestic product for the first quarter wasn't that the big line, the first line of the first table showed that the real GDP fell by 1.4% annual rate. It's this little notice news on line 34 showing that real disposable income fell for a fourth straight quarter. That is an entire year of disposable income falling. And so while in the U.S., people have done a great job of saving. I mean, they're still spend a lot of money, way too much, but they've done a good job of saving. So their savings going to carry them. But if you combine that with disposable income dropping for 4 quarters in a row, you project that out to about a year. I think we're going to be in a bit of hurt. So you got rising inflation, dropping disposable income for 4 quarters in a row, and people's savings is going to get eaten away because they're still spending a ton of money, and so savings going to get drained, and with no income to replace and adjust for inflation, not no income, reduce income to adjust for inflation, yeah, bad news. This article from Seeking Alpha, basically bearish sentiment surges to highest since post-financial crisis. Financial crisis they're referring to is 2008, and so the sentiment. So if you remember what happened in 2008, we had a financial market crash, and that lasted for a couple years, and so the indicators, the sentiments are similar to that point, and you might want to pay attention to that. This one, DeFi, from Decrypt, DeFi transactions at 1-year low, while NFT set all-time high in Q1. So that's interesting, huh? So if DeFi transactions are going down and it's 1-year low, and the NFT is going high, I mean, you just have to pull up Ape's chart to see that it's going crazy. So that gives you an idea of where you want to might, in the short term, position your investments. Layoffs begins at Netflix. This is no surprise. People are complaining that they were promised certain things, and now within less than a year, they're facing layoffs. So no surprise. Netflix cratered, and now they have to cut expenses to make up for their income. So yeah, I feel sorry for those some of those employees there. Recently, I reported about the trucking industry facing major recession issues, and due to the pandemic, COVID lockdowns, import export not as high as it used to be, etc., etc. But this article talked about this one's from Freight Waves, and it talked about not all freight companies will be impacted the same. And they're saying that deep-pocketed, bigger freight companies will be able to weather this trucking industry recession period, but the owner operator, the small mom and pops, they may not be able to sustain it. So Robinhood abandoned by fans of crypto and meme stocks. No surprise there. Robinhood, if you haven't been following Robinhood for a couple years, you can they have an interesting business model in that they sell your info to their partner companies, and then make a profit off of their customers. So their customers are really their products, not the stuff that they sell to quote unquote customers. So I don't think their business model is sustainable, and so it's no surprise there. More than likely, what they're gonna do is they're gonna try to load up on more meme coins and more meme stocks to make up for people leaving. But that's a good sign. I think it's a good sign that people are leaving Robinhood. According to CNBC, the Fed's favorite inflation gauge rose 5.2% in March as worker pay fell further behind. And we kind of touched on this earlier about disposable income. So 5.2%, and that's the personal consumption expenditure, or the PCE, which excludes food and energy prices. So that rose 5.2 in March from a year ago, and that's pretty high. And the Fed uses this as an in addition to their inflation gauge. The good news on the good news side, it did decelerate slightly from February, and I think February came in at 5.3, and employment costs accelerated to 1.4% in the past quarter, while inflation adjusted income declined by 0.04. So if you adjust the people's income with against inflation, there's a decline there. So that's not good. If you include food and energy, the core PCE prices surged to 6.6 from 5.2. So that's the fastest pace since 1982. You see a lot of these data relating back to or comparing to like the early 1980s, and that's because we had extreme high inflation back then too. So not good news for the inflation. And the Fed might use that as ammo to be even more hawkish and raising interest rates. For sure, 50 basis point in the next probably May and June. But if it gets really bad, they might even consider 75 basis points. According to CBS News, Florida is the least affordable place to live in the U.S., and this was in large part due to a lot of people moved to Florida during the pandemic, and it jacked up. So when you have increasing demand for real estate, rental properties, housing, etc., prices are going to go up. And so now it's become one of the least affordable place to live. And I think Florida has been grown significantly, in addition to like places like Texas and Austin and things like that. PIMCO guru, who predicted the housing crash, says sell now. So they're basically saying due to mortgage rates and the similarities in the pattern to prior conditions before the 2008 financial / real estate market crash, they're seeing similar patterns, and they're advising people to sell now. However, that's one perspective. Other perspectives have said that we may not have a real estate market crash. So, but this person predicted the housing crash in 2006, which is 2 years before the 2008 crash. So they did a good job there, but I think we're building up to it. I'm not sure if it's a good time to sell. I mean, according to the Miami Herald, rating agency warns Disney debt conflict could weaken other Florida government bonds. And what's going on here is, if you've been following what's happening in Florida, is Governor DeSantis, he, due to the, don't say gay or whatever thing that the DeSantis got himself involved in with businesses, especially Disney. Disney did not go along with it, so DeSantis gathered a bunch of Republicans together and was able to pass a law and signed it, removing Disney's ability to self-govern. And Disney said that they can't do that without paying for the $1 billion in what is it in the bond debt. So and what that could turn out, if they sue, more than likely Disney will win, because this was written into part of the contract dating way back when. And so if this fight continues, what Fitch, the rating company, is saying is that other Florida government bonds will be weakened because, I mean, if you backtrack on your word, people are going to downgrade your word. So basically, that's what that is. Russia makes the last gasp dollar bond payment in a bid to avoid default. Russia, they're late on multiple payments, but they do have a grace period of about 30 days. And so they're making, previously they said that they'll pay their foreign debts using rubles. And that's because a lot of their euros and dollar have been trapped or locked up because of sanction. So they said if they pay in rubles, they're still not in default. Well, not according to the contracts. So they're attempting to make good on some of these debts and get them paid in time using euros or the dollar. So let's just back and forth here. And you don't want to. Russia has not defaulted on its foreign debt since 1917, or somewhere around there. I think it was 1917. Yeah, 1917 during the Bolshevik Revolution. And the reason this is so important, in case some of you are new to finance and foreign debts and all that stuff, is if you default on a foreign debt, who's gonna allow you to borrow or invest in your country? According to a Newsweek, this article titled "When Will Ukraine War End?" and NATO has warned that it could end in weeks, could end in months, or it could end in years. Nobody knows, but we hope that it ends sooner than later. A lot of people are suffering unnecessarily due to Russia's evil actions. There are videos that are going around published by people from Shanghai expressing their unhappiness. That probably is just too light of a word about the COVID lockdown in Shanghai. People are saying they don't have enough food, they don't have enough medication, they're trapped, and they're protesting the 5-week-long strict draconian zero COVID measures over there. So imagine being like locked down for over a month. Actually, I know what that feels like because I did that to myself. It's not good. It's not fun. It's miserable. It's depressing. But the difference between me is that it was my choice. No one told me I had to do it. It was a choice. These people don't have a choice. China says that NATO has messed up Europe and warns overrole in Asia Pacific. And as some of you know, China is one of Russia's biggest supporters. They have not gone out to say anything negative about Russia's evil invasion of Ukraine. They have either tried to deflect it over and blame the West, but they're coming out here with saying that NATO has messed up Europe. No, NATO has not messed up Europe. Russia did. And China is saying this because they want to do the same thing in the Asia Pacific area, mainly the little islands in the South China Sea and Southeast Asian. So they claim that whole territory, and now they're heading over to near Australia with the Solomon Islands and creating partnerships there with the Solomon Islands. And so they're just redirecting attention and blaming the West. If you think about it, you got China, and you got North Korea, and you got Russia, and then pretty much the rest of the world. Interesting dynamics, huh? Oh yeah, this we already talked. There's numerous articles about Deutsche Bank. And that's it for the news. I appreciate your time, and I hope this give you a glimpse idea about what's happening in the global macro news, and to stay informed about the market and make more informed decisions. I appreciate it. I have more videos to come in. I have more videos to make up for, and I seem like I don't have enough time. So I'll do my best to get as many out as possible, and I'll make up some over the weekend. So appreciate it. Peace. Oh, please smash the like, ring my bell, hit subscribe, and share your thoughts to help get that information out to others. Peace.